Markets battled strong headwinds in the first quarter, including the ongoing high inflation rates, skyrocketing oil and gas prices, and uncertainty resulting from the Russia-Ukraine war. In response, volatility increased and markets dropped, ending the quarter with negative returns on all major indexes. Today, we're going to look back on the first quarter of 2022 and briefly cover what we expect to happen in the coming months on this week's video market update. So we've got to get the disclosures out, right? So I'm not making any specific recommendations, just providing an overview of what happened in the last quarter. So after hitting a record high at the first of the year, markets slid throughout the first quarter. They bounced back slightly in late March, but we still have a ways to go to recover from our recent highs. So let's look at some of the fourth quarter challenges. One of the biggest pieces of news in the first quarter was that inflation hit 7.9% in February, the highest in 40 years. Another challenge is high oil and gas prices. So we are paying more at the pump than we seemingly ever have before, as oil exceeded during the first quarter over $120 a barrel before dropping slightly at the end of March. And then another challenge, of course, is the Ukraine-Russia conflict or war. And oil prices soared following the invasion of Ukraine, likely caused by concerns that our oil supply would be affected by the war, but we only get about 2% of our oil from Russia, so oil prices decreased somewhat by the end of March. There was a greater realization that yes, this is going to cause a shock in oil and gas prices, but less so for us, but more around the world. So another issue that we've been talking about seemingly endlessly is interest rates. And to try to combat inflation, the Fed raised the federal funds rate for the first time since 2018. That hike is expected to be the first of 6 or 7 total increases, potentially getting up to 9 increases throughout the rest of 2022. So now let's take a little bit of a broader view and say, in general, the economy didn't slow down as much in the first quarter. The unemployment rate dipped to 3.6% in March, and the total number of unemployed Americans dropped to 6 million as we made our way through the latest COVID-19 surge. So companies are beginning to pick up. They're starting to get back up with the demand. The supply chain slowly starts to repair itself. But there are many industries where goods and materials are still desperately needed. So let's take a look at the second quarter outlook. So although the Fed has started the process of bumping up interest rates, it could be a while before we start to see the results of those rate increases dramatically. So we've seen Americans spend a lot, which is good because our economy is based on consumer spending, but with higher prices on everything from food and clothing and electronics and cars, we could see a slowdown in the second quarter. And then of course there's always the concern about volatility as we go into the second quarter. Now we're having earnings season right now, and we've seen volatility on the upside. The market's gone up the last few days. We've seen volatility work aggressively on the downside. Take a look at Netflix. So I thought we would look at this chart real quick. This is a seasonal performance, a month-by-month performance of the S&P, the Dow Jones, and the NASDAQ from 2018 until April. And so you can see the green are good months, the red are bad months. And you can see that March, we started to see some green. Now April has started a little slow for the NASDAQ. It started a little slow for the S&P. The Dow Jones has actually done quite well so far this year, or this quarter anyway, at least in April. So with every situation, it's different. Certainly, not making a recommendation directly for you, but as always, it's to focus on the basics, right? To focus on that diversification, to focus on the asset classes that work for you, to be in a balanced portfolio, again, that works for you and what your situation is, and to make sure we're aligned with the correct risk tolerance. So quick overview of what happened in the first quarter. We just came out of it. Just a few points on what we expect potentially from the second quarter. If you have any questions on this or anything else in the news, let me know. If not, I hope you make it a great week.